All right, Warren Buffett's option to buy shares of Goldman Sachs has earned him a paper profit of about $2 billion. That's a return of more than 40%, and it doesn't even count the $500 million of annual interest he gets from that investment. Bloomberg reporter Mark Pittman is here to talk with me about this, and it's interesting because yesterday you and I were talking about the U.S. taxpayer earning a whopping 23% return annualized on our TARP investment in Goldman Sachs. Warren Buffett blows us out of the water as an investor.
Yes, but, you know, it's probably best that we don't ask for the terms that Warren does. He has an obligation to his shareholders, and frankly, you know, the Treasury Department probably has an obligation to all of us on some level.
So we get out of our $10 billion investment, $1.4 billion, including interest.
Right.
And the warrants.
And the warrants.
Buffett, without even counting the interest, has a paper profit now of $2.05 billion. How does that work out? And he only invested $5 billion.
Yes. Well, the difference was that Buffett made this investment early on, before Lehman fell, before these things happened, and Goldman Sachs, frankly, at the time was over a barrel, and they needed help badly. And he gave it to him immediately without a lot of, I mean, there was fanfare at the time. But he received warrants totaling $43 million for 43 million shares. We invested twice as much money and only got 12 million shares. And that's just the terms of the warrants, and that's what everybody agreed to. Goldman Sachs' terms were no different than everybody else. Everybody else was
in
dealt
the
with the same
plan,
way.
you mean?
In the TARP plan was dealt with the same way.
As far as, I mean, and people forget that Buffett's options were way out of the money when he bought in, right? I mean,
they weren't too far. They were he was 15%. He got a 15% discount of the money to the stock price at the time. So he was in the money immediately. From day one, he was in the money.
Exercisable at strike price of $115, right?
Right, and and I think the stock was selling at like 125 at the time.
And it's up at 163 today.
But it did fall. It fell considerably, down in the 50s, I believe. You know, so there was a point in time where you know, Buffett was underwater too.
That's right. It went down to $52 a share. What are the chances that he's going to cash out here? I mean, could he go and exercise all of his options today if he felt? I
think he thinks that they're well in the money, and I think that anybody who thinks that Goldman Sachs is not going up to its previous levels of above 200 is probably not thinking. These are his are 5-year options, I believe. Ours are 10-year. So we've got, you know, there's plenty of time for this to work out. There's plenty of time for stock splits and other things too.
He can sit back and collect $500 million a year in interest. And Goldman Sachs is bound to do well. They're pretty well connected, the guys at Goldman.
They are.
All right, Mark Pittman, thanks very much. I'm sure we'll continue to talk about Goldman Sachs and probably Warren Buffett as well.
Probably.
The U.S. taxpayer may be third place there as far as interesting topics.